interstate registration, fuel tax filing by state, systematic inspection, repair, and maintenance of equipment. Drivers must have a documented work history and motor vehicle record, and past substance abuse testing. Routes and scheduled pickups and deliveries must take into consideration restrictions on the number of hours drivers are permitted to operate. Only specially trained drivers are allowed to transport goods identified as hazardous materials. Drivers are required to maintain an accurate log of their hours of operation, which must be produced on demand. Inaccurate records may not only result in fines, but potential liability in the event of an accident. The complexity of management responsibility to satisfy regulatory requirements in addition to demands of competition have created a market for contract logistics services. The logistics provider offers management support services to integrate compliance, financial services, freight brokerage referrals, systems management, and safety management for trucking companies. The expansion of operations into the United States will require transportation companies in Mexico to demonstrate compliance with the regulations of the United States Department of Transportation, as well as the Secretary of Communications and Transportation in Mexico. The transporters initiating operations in another country face the risk of fines or interrupted delivery due to noncompliance as a consequence of lack of familiarity with systems and procedures of agencies with whom they had not previously dealt. Utilization of logistics services reduces that risk. Management of operations in mutual compliance with the regulatory agencies of both countries goes a long way toward normalization of the risks of operations in both nations. The coordination of logistics services with insurance programs provides management support for the customer and a superior risk for the insurer. The North American Free Trade Agreement, NAFTA, contains a timetable for phased removal of barriers between Mexico, Canada, and the United States for the cross-border transport of cargo. On December 18, 1995, qualified Mexican operators were to be allowed to operate beyond the commercial zone immediately adjacent to the border and to transport goods within the territorial limits of the four border states. By December 1, 2000, all limits on access for international traffic between Mexico, Canada, and the United States are to be phased out. It is anticipated that when the borders are opened, the volume of traffic and the number of trucks to be insured will more than double. Removal of trade barriers intended to promote competition makes good economic sense. However, it often makes no sense to those which face the prospect of increased competition. The implementation of the plan to open the border states in 1995 and 1996 was met with organized campaigns by trade unions and organizations in the United States which sought to avoid competition with companies in Mexico with a lower operating cost. They justified their opposition on the grounds of, 1, drivers entering into the United States were not trained to U.S. standards, 2, their equipment did not meet U.S. DOT standards, and 3, their insurance did not meet state requirements. 163 applications pending on December 18, 1995 were placed on hold while the United States Department of Transportation and the Secretary of Communications and Transportation in Mexico engaged in dialogues to ensure verifiable compliance with mutually compatible standards. The Mexican Federal Transportation Agency is working to track and standardize information concerning trucks and drivers. Mexico has agreed to provide the United States with updated periodic reports on the physical condition of the Mexican truck fleet and the status of driver training. The Mexican government, together with private transportation companies, is working to implement an electronic data system to track the condition of the commercial transport fleet. At the same time, large U.S. trucking companies have formed partnerships with Mexican trucking companies and extended their operations into Mexico. This has led to a concern within the Mexican trucking industry that NAFTA will give the advantage to U.S. fleets operating in Mexico with newer equipment and better financial resources. In a recent message to the members of CONACAR, the National Cargo Transportation Association in Mexico, the president of that association emphasized the need to improve equipment, training, and financial resources, including insurance. As a combined effect of a new law effective in 1997 making membership in CONACAR voluntary, and the competitive pressures presented by NAFTA, private trucking associations have developed to combine resources. These associations are in competition to provide their membership with comprehensive services. Transporters have adopted the strategy of forming cooperatives for training, group purchase, and maintenance of equipment and cross-border trucking operations. In order to provide verifiable data of driver competency, recertification of commercial drivers has been mandated in Mexico. Transporters need access to driver training and certification. For the program to be of benefit, it must be certified. In late 1996, as part of the ongoing dialogue between the United States and Mexican transporting agencies, the SICADI vocational training program in Mexico was given the task to develop a binational driver training program which would meet certification requirements for the federal license in Mexico, as well as meet certification requirements for driver training in the United States. One of our objectives was to develop a driver training program which would provide recognized, documented verification of driver competency to meet standards required by the United States and Mexico, and to provide the insurers we represent documentation of driver competency when assessing a risk. We responded to the SICADI's request for information and entered into a strategic alliance with SICADI to prepare and implement a binational program to qualify drivers completing the program to hold a federal truck driver's license in Mexico and a commercial driver's license in the United States. We engaged the services of a bilingual expert in vocational education and a consultant to the American Trucking Association on the requirements for truck driver training programs. Through our consultant, we collaborated with the staff of SICADI to augment the existing driver's training program to be binational. The program provides instructional modules based on the operation of modern equipment, training and operating standards, and regulations in both countries, as well as vocational English. By aligning with SICADI and engaging a consultant with a strong working relationship with the American Trucking Association, we sought to minimize the risk that the resulting program would not be certifiable. Also, by aligning with SICADI, we sought to minimize the risk of resistance due to a perception of foreigners coming into Mexico to impose their style of doing business. Sponsorship of the SICADI program not only advances the objective of compatible training standards, it promotes a common bond with the target market of the transportation community in regional economic development as well as national goodwill. Partnering provides infrastructure, staffing, and delivery systems through a well-established, recognized institution with long-standing business relations in the transportation industry. Early on in this talk, we discussed the varied nature of risks associated with physical, cultural, and legal differences between countries. These risks are best assessed by companies with historical data and experience in assessing risks from both an underwriting standpoint and pragmatic point of view. Regulatory requirements, territorial restrictions on sales by foreign insurers, and taxation issues must also be addressed to ensure that operations are in compliance with the laws of both nations. One of the regulatory requirements of the United States state and federal agencies has an interesting impact on the insurance market for cross-border operations. For the protection of the public, depending on the cargo and the radius of operations, these agencies will require between $750,000 and $5 million US in coverage. Ordinarily, insurance is purchased for the protection of the assets of the insured. However, a great many independent truckers in the United States and Mexico do not have assets which even begin to approximate the limits of liability they must hold. Consequently, in this context, insurance is not so much an instrument of protection as it is a documentation of compliance. With its value primarily as a certificate as opposed to financial protection, insurers having assets of $5 million on their balance sheets have come into the market and reportedly assumed up to $100 billion of risk. Why the revenue from these sales has not shown up on the balance sheet and why they're allowed to continue to operate remain a mystery. What's not a mystery, though, is that because they have no significant assets to protect, they are able to undercut the market of insurers with assets to protect, making competition on price alone impractical. If your business requires you to contract with transporters, you should require not only evidence of insurance, but also verifiable financial information on the insurer. This information can be obtained from the Comisión Nacional Bancaria y de Seguros in Mexico, Companies providing coverage in the United States are rated by AM Best Company. The best ratings are published annually. In 1996, we began work with international insurers, each of which maintain operations in the United States and Mexico, to develop a comprehensive insurance product which provides uninterrupted coverage for operations on both sides of the border. While the truck operates in Mexico, it is insured through the Mexican subsidiary based on rates and standards adopted for Mexican operations. Once it crosses into the United States, the coverage afforded by the United States subsidiary based on rates and standards for United States operations takes over until it crosses back into Mexico, at which point the coverage through the Mexican subsidiary resumes. Working with Mexican insurers within the same corporate group as their American counterpart allows for the underwriting of multinational risks, utilizing the data and experience acquired by the company's operations in each jurisdiction. It also allows for allocation of cost, profit, and risk through internal management and avoids issues of territorial exclusivity of insurers operating in the United States and Mexico. This provides the insured with the benefit of one company with which to deal with respect to policy transactions and responding to claims, no matter where an accident may occur. This also allows the insurance companies to utilize their facilities and staff in each jurisdiction to properly assess, competitively rate, and service the insured risk. In approaching this new market, we recognize the need to align with a broker with the resources and capacity to serve an international market. In late 1996, we entered into negotiations with Guy Carpenter & Company, the world's largest reinsurance broker. Reinsurance is a risk-spreading mechanism for insurance companies. In exchange for the payment of a premium, the insurance company can shift to another insurer a portion of the risk that it has already contracted to assume. It is also an effective means by which coverage from different facilities can be combined as a single product. The United States Department of Transportation imposes strict regulations on equipment. Compliance with these regulations is much more certain with newer equipment. Reliability, fuel economy, and avoidance of downtime for repair significantly improves the efficiency of operations. There is a ban on the importation of diesel equipment into Mexico. There is a scarcity of late model used equipment. The cost of a new unit in Mexico ranges between $70,000 and $80,000 US dollars. The transportation industry and their lenders experienced substantial losses due to the devaluation of the peso in 1994. Financing is restricted by high collateral requirements and interest rates. For example, Bancomext, the state bank charged with responsibility for the promotion of export trade in Mexico, requires 50% collateral. This means the borrower must have no existing debt at the time of application. If he wants to buy 10 trucks, he must buy 5 for cash before he can finance the purchase of the remaining 5. He must then give the bank a lien on all 10. The same principles of spreading risk on which insurance is based also apply to financing. Cross-collateralization among members of an association or co-op presents a much better risk than numerous individual borrowers. Pooled funding by engine manufacturers, tract manufacturers with financing programs in conjunction with funds from banking institutions further reduces the risk assumed by each lender and correspondingly the interest which must be charged for funds. Risk of loss due to currency adjustments is reduced by securing debt with receivables on dollar-denominated contracts, which are characteristic of the United States-Mexico cross-border trade. In September 1996, we began our efforts in conjunction with a major engine manufacturer to develop a financing program for new tractors incorporating their engines. As of February 1997, a program for purchase and full-service lease are now available. In addition to providing an additional source of funding, working with an engine manufacturer provides maximum flexibility in meeting the customer's needs. The engine, which represents 50% of the cost of the finished product, can be ordered for the brand of tractor of the customer's choice. Development of affordable financing for new equipment fosters growth of the market to be served and provides direct linkage of the insurance product with the sale and financing of equipment. By combining the insurance program with logistics services, freight brokerage referrals, training, equipment programs, and financing, the packaged services can be sold based on value rather than price. While it may not be the lowest price, with the efficiencies of the combined services, it is the lowest cost. Improved efficiency, reduction, and management of risk are mutually compatible goals. Managing risk involves a partnering relationship with the customer, as well as the team of service providers. The approach I just described is intended to form an interactive relationship between the provider and the international market to promote efficiency, profit, and growth through management and support consulting services. The principles of this strategy can be used to effectively increase global competitiveness in any other multinational venture. Thank you for your time.
Thank you, Mr. Jordan. Let us continue with the second question and answer session. Our first question has come in by fax from the Instituto Tecnológico de Huatabampo in Huatabampo, Sonora, Mexico. The question is, how important is it to have an efficient market for monetary exchange when we are confronted with the possible monetary changes, especially between Mexico and the United States, which we've experienced in the past? Dr. DeNoble?
Well, I think it is absolutely critical because, because of the history of devaluation makes it very difficult when a currency is devalued relative, let's say, to the U.S. dollar. It makes clearly foreign imported goods into your country very, very expensive and very cost prohibitive. While at the same time it can have some positive effects in that when you try to introduce your products into foreign markets, to some extent it could give you a cost advantage. But the exchange rate situation really will have an impact on whether or not foreign business operations can be profitable, and that has to be evaluated and considered as a risk in your international business planning.
Mr. Jordan?
There will always be variations in currencies. What's most important is to have a reliable means by which to assess those variations so that a given transaction at any point in time can be calculated and that calculation is reliable. In that sense, an effective exchange system is absolutely essential.
Our next question is from the Instituto Universidad Empresa, from the Universidad Blas Pascal in la provincia de Córdoba in Argentina.
Buenas tardes.
Buenas tardes.
En la Universidad Blas Pascal
At the university here, we have students who are on a medium level who are interested in undergraduate students who have this question. What vision and perspective do you have as the speakers as to how the influence is happening between the exchanges between the Latin American cultural identities in this globalization process in the world? So here we have the same question in a different way.
Dr. DeNoble.
I think, especially from our perspective, located in San Diego, California, where we are in very close proximity to the Mexican border and the Tijuana region, the influence of Latin American culture is an integral part of our daily lives, and I think that is becoming much more pervasive throughout the rest of the country. We hear a lot about Latin American products and services and companies that are making significant inroads into this country. So I believe that the prospects for Latin American business to participate in this international market will continue to grow in the future.
Okay, our next question is from la Universidad Espíritu Santo in Guayaquil, in Ecuador.
¿Aló? Sí, ya, ¿qué seguridad debe adoptar un exportador que cumple
What
todos los
measures does an exporter need to make sure of when someone is exporting a product and the importer in the other country is not in agreement, is not happy with the product and decides to return the product? So in order to guarantee that that doesn't happen, what are the necessary measures to be taken?
Dr. DeNoble?
Well, that is one of the critical risks that I talked about earlier, in the sense that you've got to be prepared to deal with this type of a contingency. And it's very important to establish the kinds of relationships with your foreign partner that's going to serve as your marketing and distribution arm, so that you and your partner are clear on the product standards and the product specifications that you have to adhere to and to deliver on. But I think it's real important, if you're going to make plans to participate in the international market, that you prepare for such contingencies, and you should have some kind of a procedure set up to deal with returns, because inevitably that's what's going to happen, and that's going to be a basis for you to build credibility in your foreign market. The fact that you're able to respond to your customers in this way.
Thank you. Our next question is from the Instituto Politécnico Nacional de Educación Continua en México, Distrito Federal.
Muy buenas tardes. En primer lugar, quiero agradecerles.
Good afternoon. In the first place, I would like to thank you for this opportunity. My question is,
El primero es, ¿cuáles son los requisitos?
what are the requirements to become certified for operators of transports or for vehicles, and what are the features of the programs, the training programs?
Mr. Jordan?
Yes. Between the United States and Mexico, there has been a normalization of the requirements for an operator. The operator in Mexico will qualify for a federal driver's license, and if he is a commercial driver in the operating as a commercial driver in the United States, he would qualify for a commercial driver's license through the Federal Highway Administration. There are differences with respect to log maintenance requirements between the United States and Mexico. While both countries have restrictions on operation, there are differences with respect to the requirements of how that should be documented. And there are significant consequences for failure to maintain that documentation in the United States. There are differences with respect to inspection requirements in the course of operation of the tractor in the United States. And it's important for the operator to understand what those differences are and conform his inspection to those requirements to be able to demonstrate compliance. The SACADI has developed in Mexico a professional drivers program for domestic operations in Mexico. The expansion of that program to make it binational adds these additional components with respect to operation in the United States, as well as vocational English and other factors. If there is any further question with respect to this, I would suggest you contact the International Training Center, and they'll be pleased to provide you with additional information.
Thank you. Our next question is from Fundação Carlos Alberto Vanzolini in Sao Paulo, Brazil.
Alô?
Buenos días. Aló.
Alô?
Aló.
Mi pergunta,
My question. would be,
quais são as condições
what are the conditions
coordenação e
in order to
unificação
coordinate and unify, homogenize,
de regramento de
regulations for policy to guarantee guarantees that the insurance companies have on an international level?
Mr. Jordan?
Not policies, but yeah, policies. I'm sorry.
Okay. In terms of integration of coverage between different nations, what you really are talking about is an assessment of the exposure to be encountered and for which you're providing protection. That requires, in turn, the development of the contract to specifically address those issues. As a consequence, for example, if there's a difference in the law which creates an exposure for liability, then that difference has to be recognized, and the policy has to provide for that difference. That is, in a very simplistic fashion, the type of difference that you're talking about. But this is an entire subject that could take a lot longer than we have today, and I'm sorry that we can't go into further detail at this time. Mr. Page.
Thank you for your excellent questions, but we've run out of time. Thank you, Dr. DeNoble, Mr. Jordan. We hope you have enjoyed participating in this video conference. We will continue transmitting programs on the latest in negotiation and dispute resolution and global competitiveness. We invite you to participate on September 25th in the next program of our series entitled Transforming Conflict into Win-Win Opportunities, the Key to Successful International Negotiation. For additional information on the International Training Center's programs for this year, please consult your participants' manual, where you will find the dates and specific topics for these. Also, if you are interested in participating in training programs, which will be offered by the International Training Center, please contact the Center by letter, phone, fax, or email. On behalf of all of us who collaborate with the International Training Center, I want to thank you for your participation and interest in today's program. Thank you, and see you soon.